Hello, everyone. Welcome to this week's weekly market view for Monday, the 30th of September to Friday, the 4th of October, 2024. My name is Vishal. Let's get started. All right, let's start with the Nifty analysis and let's start with the daily chart of the Nifty. So today we had some heavy duty selling on all the indices across the board. We saw a cut of close to around nearly a close of around 368 points on the Nifty, nearly a close to 1.5% cut on the Nifty. So index is pretty much sold off. Now, of course, there is also a lot of news which is surrounding the indices, etc., with the SEBI meet and what regulations are going to be coming up for retail traders and investors with respect to futures and options trading. And maybe that is what is getting a little bit discounted in this market. However, we have a level of demand now at 25,524 to 25,288. So generally, when the market has has moved up very strongly, it is bound to give a little bit of a corrective move to the downside. We have this very good level of demand here, and let us see if price comes to this level probably in the coming week itself and gives us a reaction. Today, we also have some Fed news which is coming out in the night. So it'll be interesting to see what that news is all about and what kind of an impact it is going to create on the global markets as well. Let's move on to the Bank Nifty chart. On the Bank Nifty, we see a level of demand from 52,260 to 51,643. Still no clear level of supply on Bank Nifty. We have confluences of open interest levels 52,000 and 52,400 nicely coinciding with this level. So it'll be interesting to see that once price comes here, whether we get a bounce and the market starts to move again to the upside. So this is going to be a critical level for Bank Nifty 52,260 to 51,643. Let's move on to Nifty Financial Services. We have a level of demand on Nifty Financial Services, again, lined up at 24,076 to 23,862. Nice open interest level, put open interest level 24,000 within this area. So it's not going to be very easy for the market to break this level and close below, but we never know. So we have to keep this level on the chart, and we will see whether we see a bounce from this level of demand. Let's move on to Nifty Mid Select now. On Nifty Mid Select, let me just refresh the graph here. So Nifty Mid Select is behaving a little erratic right now. We have this area of supply to which it is reacting from. We had one touch. Today we had the second touch, and now we have the close at 13,223 odd levels. Now, there is no clear level of demand yet on the mid cap. So we are going to keep a little bit of a cautious view on mid cap. And if there is any level of demand that's located right here, so it's very, very far away from current market price. So mid cap Nifty will have to really fall strongly towards this area. But we do have an open interest confluencing this level, 12,800, and just a level above 12,900 acting as a strong support for mid cap Nifty. Let's move on to the Sensex. So Sensex, the level of demand is very, very clear, 83,374, 82,681. And if you see, most of the indices have a level lining up in similar areas. Okay. If we look at BankX, we see a level on top of level scenario. So there are two levels, 59,343, 58,996, and then we have 59,017 to 58,587. So these are going to be the two crucial levels. We have 59,000 as the open interest level lining up with this level of demand, acting as a very, very strong confluence. All right, from the BankX, now let's move on to the index heavyweights. Let's start off first with Reliance, and then we will have a look at HDFC Bank. So on Reliance, as mentioned to you all earlier, we have this level of demand located over here. And we also have this level of supply located over here. So right now, prices are more or less consolidating in the middle. There is no clear level. And most likely, we might see Reliance just moving sideways between this supply zone and this demand zone in the days to come. Unless and until we see a clear break of the 2900 level, which will probably force the prices to move further down towards 2800 level and then towards 2700. But 2900 is going to be acting as a pretty strong support for Reliance. Let's move on to HDFC Bank. Let's quickly have a look at HDFC Bank. So HDFC Bank moved very strongly and very nicely. We had a very, very good move towards the upside, nearly touching the 1800 levels. But now, because of today's corrective move, HDFC Bank is also correcting. Now we do have a level of demand over here, and it'll be interesting to see how HDFC Bank plays around this level. There is a nice confluence of open interest located at 70-100 odd levels. So if Nifty, Bank Nifty do pull towards that level of demand and HDFC Bank also comes towards this level, then it will be interesting to see whether HDFC Bank starts moving up, which will force probably Nifty and Bank Nifty to also move up again towards the 1800 level. So keep a close watch on this level of demand, 1679 to 16748. The current market price of HDFC Bank is currently trading at 1732 odd levels. All right, so these are the key levels for the indices and for the stocks for this week. Now let's move on to the commodities and let's look at some key levels on commodity markets. All right, now let's look at the commodities chart. And if you look at the gold chart from last week, we had this supply zone. We were expecting gold to actually correct from this level, but gold just simply blasted through this level and moved to the upside. So now this supply zone is no longer intact, and now we have a level of demand over here, which is a new level of demand which is created. So it'll be interesting to now see how the prices respect this area over here. This is more or less a level on top of level. We have confluences of open interest, 74,000 and 73,000 level. Because gold is making an all-time high now, the bias on gold is that it's going to probably correct a bit to give a further move to the upside. To the upside, 76,000, 77,000 seem to be the key targets for gold in case if gold continues to move to the upside. Let's look at silver now. And if you look at the silver chart, the silver chart is holding on to this level of supply. It went a little bit deeper into the level. Currently, it is trading at 91,116. And as we can see, the moment it has hit the supply zone, it has taken a little bit of pause. Now, what is interesting to see is because gold has created that level of demand, we also see silver create a level of demand over here. And it will be interesting to see now whether silver tends to hold this level of demand. In case if silver does hold this level of demand, then probably most likely we will see another big up move in silver, first towards 95,000 and then towards the 1 lakh handle. So very, very interesting formation developing on silver, and probably in the days or weeks to come, we will exactly come to know whether this supply zone holds or whether this demand zone acts as a strong support and pushes silver, just like gold, to the upside. Let's look at copper now. So copper hit the opposing level of supply. This would have been the first target for copper, and now you can see it has moved up and it is probably reacting to some area over here. Level of supply is sitting right here on copper. So pretty much even if the price corrects from this area, it might come into a potential level of demand. There is one gap level of demand over here. This is more or less a pro gap. So I'm going to mark this level like this, 823 to 799. And a more aggressive trader can also possibly mark this level, something like this. So this will be the level on copper, 823 to 806 demand, from where we would expect the prices of copper to bounce and again start moving towards the 860 and the 870. So now we might tend to see a little bit of profit booking coming on copper. Let's look at crude oil. So crude oil, nothing much has happened on crude oil. We are seeing crude oil is bouncing from 55.02 to 52.94. It did give a bounce, very, just a very feather touch kind of a move to the upside. We still have a lot of supply on crude oil over here, but this supply is probably going to, unless and until the price comes right all the way up till here, very, very difficult for us to tell whether the supply zone is going to hold or is going to break. right? But we do have a level of supply. This is going to be acting as a strong resistance point for the market, 60, 68 odd levels. If this price breaks to the upside, then this supply zone could act as a potential trap where a lot of retail traders and investors can probably get trapped into this area. And then probably we might see another fall in the crude oil. Let's look at natural gas. So currently we are looking at the natural gas chart. We are within this area of supply now on natural gas. Prices just falling a little bit short of the supply zone. However, the highest open interest is 250, 255. So one needs to be a little careful here. We are coming into an area of strong resistance on natural gas. So any idea or any association of longs should be avoided. We do have two key levels of demand here. We have this gap level of demand, rally-based rally. And just below that, we also have another level of demand, which is this drop-based rally of demand. So there's a nice confluence of the open interest levels. So there is a nice confluence of these levels over here. And yeah, we'll have to just wait and watch now for natural gas. And probably some news will probably kick in and probably prices will react from this level eventually. So let's keep these levels on the chart and we'll come back next week and review the levels once again. I hope you all enjoyed the analysis. If you do like our channel, hit the subscription button, hit the like button, and do give your valuable comments in the comment section. Have a lovely trading week, everyone. See you all next week. Take care. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.